You are going to want to see this episode because we're going to be talking about Flood Risk 2.0. Rich Costante, Responsive Insurance, he's the man. You don't want to miss it.
Really, Mary?
Hello, it's Mary Bartos with Bartos Group of Premier Plus Realty, and you are finding yourself on Really Mary. Now, this is a hot topic, or a wet topic. On my panel today, I have Rich Costante from Responsive Insurance. Hello, Rich.
Hello, Mary. Thank you for having me.
Oh, my pleasure. This wet topic that you're seeing all over the news actually is about the National Flood Program.
Mm-hmm.
And it is the Flood Risk 2.0. So we're going to do some myths, some facts. This is all in preparation for a webinar that we're going to have in 2 weeks' time, so stay tuned for that. So Rich is going to really just start talking about it. So with that said, what's happening and why is this happening?
Alrighty, so the National Flood Insurance Program is overseen by FEMA.
Yes.
And they used to have their guidelines that they've had for eternity, it seems.
Right.
That program was struggling financially. It was on the verge of possibly being bankrupt.
Yes.
So they decided to roll out Flood Risks 2.0.
Yeah.
Biggest difference is now the distance of the coastline is going to factor into the premium, as well as your construction type of your home. Before, it was purely based on elevation of the home, right, and what zone you were in. Now the zone factors in very little, but more so the distance to coast. Right. Is factored in. So each home will be properly rated for flood. So for instance, a home on Marco Island and a home in Ave Maria are going to, if they're the same elevations and in the same flood zone, yeah, they're going to be different premiums because Ave Maria is so much more inland.
So benefit to you if you live out in Ave Maria, because it's going to be a little bit less than it was before, yes, right? Mm-hmm. But keep in mind, we are a coastal area here in Southwest Florida, and there are many coastal areas where you are coming from to move to Southwest Florida. So this is nationwide. This isn't just about us. But, talk about those increases that we're kind of seeing right now, Rich.
Well, we're seeing increases upwards of, close to 10 times the original 1.0 rate. And that's in the coastal areas. And again, we're seeing those in the X zone, which used to be in 1.0 the preferred risk zone, and we're seeing them in the AE, AH zones, which always required flood elevation certificates. Mm-hmm. The benefit of 2.0 is elevation certificates are no longer required. So if you're getting a mortgage and they're requiring a flood policy, we can quote it right away without having to wait for an elevation survey to be done.
Silver lining.
That's the silver lining, absolutely, yes.
Now, but having said that, they've put in a position so it doesn't, like I as a homeowner, it doesn't jump right up to 10x because I have flood. So
correct.
Talk about that.
So there's a couple different things that they have going. So first off, if you own a home currently and you have an NFIP flood policy, the maximum increase you could see from everything that they've been told us up to today is an 18% increase year to year. So even though the full premium may be $4,000, $5,000, $6,000, if you're only paying $700 now, right, it'll increase 18% until you get to full rate. The hiccup comes in with people who are purchasing new homes. Because if they're purchasing a new home,
new construction,
well, both, correct, right.
Okay.
So I'm going to talk new home first. If they're purchasing a new home that is an existing structure from from another person, they're stuck in 2.0. Now, we can limit their premium based on if that current owner has a flood policy. We can get them,
beneficial.
Correct. If we get that flood policy, we just would need the policy number and the company, yeah, and we can get them what's called glide path rated. So instead of a $4,000 premium, it may only be $600, $700, $800.
Okay.
Which is much better.
Oh, without a doubt.
Unfortunately, if they're buying a home and they do not have a current NFIP flood policy, right, then they're going to be stuck in the full 2.0. At that point, we can look to see if an elevation certificate will benefit and lower that down a little bit, but the glide path rate is way better than the elevation certificate. Their elevation certificate helps. Yeah. It's better than paying the full premium.
Right.
And it will never hurt you.
Right.
But the glide path is the way to go. On new construction, the only option we have is getting an elevation certificate and seeing if that can tweak it.
Yeah.
And that's NFIP program. There's others out there as well.
There's private programs,
There is
right?
private programs, and the benefit of the private flood programs is, number one, you're not restricted to your coverage amount. So in the NFIP policy, you can only have $250,000 worth of building coverage. The private flood, you can take it all the way up to your dwelling limit of your homeowner's policy, whether it's $600,000, $900,000, $1.2 million.
Okay,
So there's
that's
no
good.
cap on that.
Yeah.
Yes, it's better coverage.
Okay.
You get loss of use, you get replacement costs no matter
Okay.
what, and generally speaking, you only have one deductible. On the NFIP policy, if you have a claim, you're going to have a deductible for the building and a deductible for the contents.
Okay.
On the private flood, it's generally one deductible.
You know, that's pretty phenomenal because, you know, and it looked like it was about half the cost. So
Private flood is generally, I have yet to see where NFIP flood was lower than a private flood when private flood was offered.
okay.
That's the hiccup, is private flood's not offered everywhere.
Okay, so I'm telling you what's happening here, and we're kind of live and learning and living as it's going out because they're changing it. As a matter of fact, what happened just last night?
Just last night, Congress approved, or reauthorized, I should say, the NFIP policy, so the NFIP program. So it's continuing at 2.0 now, but if they didn't reapprove that, NFIP would have been defunct today,
Yeah.
which would have only left private flood.
And today is October 1st, 2021, just to put a marker in it when this is all starting. Now, October 1st is for new policies, right? They're going in right away. You have to quote them this way.
Correct. And through the NFIP policy, there's a 30-day waiting period,
Okay.
mandatory. Unless there's a loan closing is the only thing that can back that date up. But
Okay.
without a loan closing, there's a 30-day waiting period. So we've been dealing in our office with the 2.0 rates since September.
So I know we're going a little long, guys, so hold tight because this is pretty critical. If I'm buying cash on a home and I have a quick close, I'm not going to get flood insurance for 30 days?
Correct. If there's no loan closing, correct. It's a 30-day with NFIP. Private flood's different. They some have a 5-day wait, some have a 3-day wait, some have no wait.
Okay.
Depending on the carrier.
Okay.
But NFIP flood is a 30-day wait, and that's the 30-day wait is written concrete. That's mandatory. The only way you can get out of that is with a loan closing.
Okay, so there's a lot of things you can see that are going on with this. One, how to mitigate the increase, you know, what our increase is. It's going to be very specific to your property, where it's located, how close you are to the coast, what you're paying today, where, if you have insurance, if you don't, if you're buying, how all that works. So we are going to do a webinar in a couple weeks, so stay tuned for that. We'll make sure we post it. But in the interim, and as always, we want to make sure that you get the best information possible, and the only way to do that is to go to the expert, and that's Rich. So his information is going to be below. So if you're curious about what this looks like for you, please call Rich, text him, send an email, etc., because this is pretty critical. Now, one last thing about all of this, flood insurance, as he said, the past program and the current one with National only covers $250,000 and $100,000 in contents. So, and on Marco Island, we're going to tell you at least the numbers that the person that tracks flood insurance here gave us, the number of flood policies that had a claim in the last 20 years. I don't have that data for all of Collier County, but we're also going to have those folks on a future webinar. So this is a hot topic, or wet topic.
Yeah.
We want to make sure you're dry. So until next time, I'm Mary Bartos with the Bartos Group of Premier Plus Realty, and we look forward to making sure you're dry here in